Now, going into the Federal Reserve interest rate meeting, market expectations are that the Federal Reserve is going to hike by 25 basis points. You can see here it's a 95% chance that they're going to hike on the 3rd of May at 7 o'clock UK time by 25 basis points. And you can see short-term interest rate markets are currently pricing in 2 rate cuts heading into the end of this year. Now, looking at the SeasonX risk event service, you can see very clearly that when the Federal Reserve hike interest rates, so let's just look at the Fed rate change, and let's look at the Federal Reserve when they're going to be hiking interest rates, and you just look under the central banking toggle, go to Fed rate hike, and you can see that when the Federal Reserve hike rates over the last sort of 25 years, there's a pattern of the S&P 500 gaining into the hike and then falling out of the hike. So there's a lot of speculation about what the Fed is going to do on the 3rd of May's meeting. So will they affirm their hawkish stance to bring down US inflation? Will they announce a kind of pause? Do they see rate cuts coming? So just notice that if we see aggressive forward guidance, there is a seasonal bias for selling the S&P 500 out of the meeting. So if the Fed do take a more hawkish stance in their forward guidance, watch out for sharp selling. Major trade risks. Of course, the major trade risk here is that the Fed announces a hike, but then signal rate cuts to come. However, do note this seasonal pattern is still worth looking at, because interest rate markets have been pricing in 2 rate cuts already. So that's quite a high bar for the Fed to surprise with a dovish announcement, and definitely worth looking at as we head into this decision, noticing this seasonal pattern. Remember, don't just trade it, but season exit.